market lost some ground today after gaining very strongly for all of this week. You notice for the first 4 days of the trading week, we saw the index gain, but today it lost a bit, losing about 20 basis points there. So for the week, the NSE index was up this week 1.7%. But the good news, though, is that we're seeing volumes increasing gradually. Over the last 3 sessions, there has been quite positive flows. And obviously, some investors are looking at the market today and saying it's quite cheap. So to get some perspective on the market, we're joined by Ayodele Aledare from Cowry Asset Management to give us his views on the movements that we're seeing. Thanks, Ayo, for coming on the program.
Thank you very much.
All right. Today, for instance, we saw some strong gainers, Guinness, Nestle, Cadbury dominating there. But there's generally a view now that we are moving into a trading range. Like I said earlier, the NSE index fell. What's your view on the movements that we're seeing now?
Oh, well, purely, we've seen market rallying 5 successive days. So the market has actually crashed to a level whereby it had to correct naturally. So the market corrected naturally, not because of any new macroeconomic development or any news around the corner, but the market had to correct naturally, and it did that. Then, of course, it was supported briefly within the week when we saw some corporate actions.
Right.
Continental Insurance came out with a relatively better 2009 financials. They declared 5.5 kobo and then immediately went on bid. So the major drivers of the market will remain the fundamentals, corporate actions, liquidity, and of course market sentiments. Those are the drivers of the market going forward.
Well, when you say fundamentals, obviously we think of company results and earnings expectations. Cadbury, for instance, we saw release forecast yesterday, and the share price has rallied since the company did that. What would you say right now in terms of the earnings that we're expecting from various companies? Which ones out there do you think would give the market a boost going forward?
Well, we're expecting some results from the food sector, flour mills. I think the result is overdue. We're expecting Dangote sugar, Dangote flour. Right. But basically, I think the current pricing has factored in the expectation of the result. For me, I really don't see much big deal in the result because manufacturing companies and even the real sector are facing credit squeeze right now. They've had to cut costs. They've had to, and even access to credit is reduced. The cost of production is high. So I really don't see much boost from that sector because Unilever released the result. We saw a drop in profit. WAPCO, we saw a drop in profit. Nigerian breweries, and even Guinness. So the result from flour mills may not necessarily ginger the price because for me, I think they are trading at their fair values.
Okay, but let's look at the rescued banks, for instance. Obviously, we're still expecting earnings from those banks. Obviously, full year numbers up to December 2009 are not expected to be positive. But the first quarter numbers is one thing that some people are looking to move the market forward. What's your view on that?
Yeah, well, First Inland, I think they surprised the market also. They came back to profitability in first quarter 2010. Union Bank did the same thing, 3.2 billion after-tax profits. So, and of course, investors looked at that, and immediately the share price went on strong net bid. So the full year result for the bailed-out banks would remain negative. Today, Afribank released another result. I think they have a negative shareholders fund in excess of 200 billion, and also a loss after tax of more than 200 billion. So the first quarter result is what investors will be looking at. But the key thing with the troubled banks, we still classify them as risk asset. A lot of them are facing litigation in the court of law. So the eventual fate of the shareholders is still very uncertain. Right. So there could be a possibility of high returns, but there is a high risk, attached to those troubled banks.
Okay, and as we round up now, I still want to come back to what you think might boost the market. From what I hear you saying, the results of the likes of flour mills are not likely to give the market any fundamental support or boost. So what exactly? Because everyone keeps talking about earnings, that the fundamentals are good, that companies are well priced, or rather are underpriced. So which earnings, which companies exactly are we expecting to give those positive numbers?
Well, I talked of liquidity and market sentiment. Despite the bleaky, gloomy outlook for the troubled banks, market sentiment would still push the share prices up once they come back to profitability. Once investors feel that there is a turnaround, then market sentiment will definitely push the share prices. Then liquidity, we need external liquidity, inflow of funds, probably from outside within the financial market, probably from offshore. That may boost the market.